The ledger books of medieval merchants, trade written in ink. The rise of the merchant's account. When you imagine the medieval economy, you might picture busy markets, ships heavy with goods, or caravans winding across dusty roads. But behind the bustle of trade stood something quieter and far more enduring: ledger books. These were thick volumes filled with neat, repetitive entries, lists of goods bought and sold, debts owed, payments received. To the medieval merchant, the ledger was not just a tool, but the foundation of business. The story of medieval trade is not only about exotic spices or distant voyages. It is also about clerks hunched over parchment, dipping quills into ink, and carefully recording transactions line after line. These records are repetitive, even dull, but without them, commerce would have collapsed. The emergence of merchant records. As trade expanded in the 12th and 13th centuries, merchants required better systems of memory. Oral agreements or casual notes were no longer sufficient when deals stretched across cities and months. The ledger book, bound parchment or paper filled with organized entries, emerged as the answer. Italian merchants were among the first to adopt systematic record-keeping. In cities like Florence, Venice, and Genoa, merchant families developed elaborate books of accounts, dividing them into categories of income, expenses, and outstanding debts. These systems spread northward, influencing merchants in France, England, and the Low Countries. The result was a transformation. Trade became not just an exchange of goods, but an act of writing, where ink on paper carried as much weight as spices in sacks or woolen bales. The physical ledger. A medieval merchant's ledger was often a large bound volume, covered in leather, its pages ruled with faint lines for orderly writing. Some were kept in strong boxes, protected with locks, for they contained not only numbers, but also the memory of a family's wealth. The entries were formulaic. A clerk would write the date, the name of the partner, the goods exchanged, the price, and whether payment had been received. Margins were filled with notes of debts or reminders of due dates. To leaf through such a ledger is to encounter monotony. On this day, so-and-so delivered 6 sacks of wool. Payment received for 4 barrels of wine. Debt owed by such and such, to be collected at Easter. Page after page, year after year, the same patterns repeat. Yet these patterns were the lifeblood of trade. Double-entry beginnings. By the late Middle Ages, merchants in Italy pioneered double-entry bookkeeping, a system that recorded each transaction twice, once as credit, once as debit. This allowed more accurate balancing of accounts and made it easier to track profit and loss. The system was not immediately universal. Many merchants continued with single-entry notes, but double-entry gradually spread, providing the foundation for modern accounting. Its significance lies not in excitement, but in precision, the boring precision that kept businesses solvent. The clerks behind the books. Most merchants did not write their own ledgers. They employed clerks, young men trained in reading, writing, and arithmetic. These clerks spent long hours copying figures, calculating sums, and balancing pages. The life of a clerk was monotonous. He sat at a wooden desk, quill in hand, ink-stained fingers, repeating the same formulas dozens of times each day. Errors were costly, so care was essential. The survival of some ledgers with neat, uniform handwriting testifies to their discipline. Few clerks are remembered by name, but their anonymous labor preserved the flow of medieval commerce. Trust and verification. Ledgers were not just private records. They were instruments of trust. Merchants often showed entries to partners or courts to prove agreements. Disputes over debts could be settled by producing a ledger, its inked lines carrying authority. Some merchants had their books notarized, ensuring that entries could serve as legal evidence. Others invited witnesses to transactions, whose names appear in margins. This constant concern for verification reflects the fragile nature of trust in long-distance trade. The monotony of repeating each detail, date, name, amount, was not needless bureaucracy. It was a safeguard against memory's failure and partners' dishonesty. Trade networks in ink. Ledger books reveal the vast networks of medieval trade. A Florentine merchant's ledger might record transactions in London, Bruges, and Constantinople. An English trader might list shipments to Calais and Florence. Yet the entries themselves are not dramatic. They appear as lists of sacks, barrels, or coins measured in precise quantities. 10 sacks of wool, sold to Giovanni, payment due at Pentecost. The repetition hides the scale of global commerce, reducing it to tidy lines of ink. Reflection. When you think of medieval trade, do not imagine only the clamor of marketplaces or the creak of ships' masts. Imagine also the silence of a room where a clerk bends over parchment, writing line after line of figures. Imagine pages filled with identical formulas, debts and payments carefully aligned. The ledger was not exciting, but it was essential. Without these repetitive records, merchants could not manage debts, kings could not levy taxes, and trade networks could not endure. And yet, one might wonder, if the true power of commerce lay in these dull pages, were the merchants themselves aware that their legacy would not be the goods they sold, but the ink-stained ledgers they left behind? Debt, partnership, and the repetition of records. If Section 1 showed the emergence of merchant ledgers, Section 2 brings us into their contents. The lines of ink that captured not just goods exchanged, but relationships of debt and trust. For medieval commerce, debt was as common as bread. Few merchants paid in full at the time of purchase. Most transactions involved promises, delayed payments, or credit extended across months or even years. The ledger was therefore less a record of goods than of obligations. Debt as the fabric of trade. Debt was not shameful in the Middle Ages. It was the lifeblood of trade. Merchants routinely bought wool on credit, promising to pay after the cloth was sold abroad. Spices from the East were advanced on loans, to be repaid once ships returned. Even small transactions, barrels of wine, sacks of grain, were often entered as debts. Ledger entries show this plainly. To Giovanni, 10 sacks of wool, payment due at Pentecost. Owed by Richard, 2 barrels of wine, to be paid in Bruges. The phrasing is repetitive, varying little across pages. Yet the monotony reveals the system's stability. The ledger was not only memory, but contract, binding merchants to promises. Partnerships in ink. Most large-scale trade required partnerships. 2 or more merchants pooled resources, shared risks, and divided profits. These partnerships were formalized in contracts, then maintained in ledgers. The entries repeated formulas. So-and-so entered partnership with so-and-so, each contributing such amount, profits to be divided equally. When profits arrived, clerks recorded distributions. To Giovanni, 2 florins from the sale of wool. To Matteo, 3 florins. Partnerships could last years, with hundreds of small entries documenting advances, expenses, and returns. The monotony of the ledger tracked the flow of trust across time. The language of repetition. Merchant ledgers relied on fixed language. Entries followed predictable patterns: date, partner, goods, payment. Clerks copied these formulas endlessly, rarely departing from convention. For example, Florentine ledgers often used the phrase per libro nostro, according to our book, to indicate that an entry was binding. In England, accounts used formulas like "be it remembered that," these words, repeated line after line, gave legal weight to ordinary transactions. The repetition was not laziness, but precision. Consistency ensured clarity if disputes arose. To read a ledger is to encounter a rhythm of words as steady as footsteps. The role of notaries. In many cities, notaries played a role in verifying accounts. Merchants brought ledgers to notaries, who added endorsements or witnessed entries. This added another layer of repetition. The same debt recorded in a merchant's book and in a notarial register. These registers are among the most monotonous documents of the Middle Ages. Endless lists of names, dates, debts, and payments. Yet they preserve trust, ensuring that no single ledger could be falsified without contradiction elsewhere. Balancing the books. At intervals, clerks balanced accounts, ensuring that credits matched debits. This required tedious arithmetic, adding long columns of figures, checking sums against previous pages. Errors had to be corrected with marginal notes. Balancing was repetitive but essential. A merchant who failed to reconcile his accounts risked ruin. Surviving ledgers show neat closing formulas. Thus, the account is settled between so-and-so and so-and-so. These formulas appear again and again, marking the rhythm of trade. Disputes and resolutions. Of course, not all debts were paid promptly. Disputes arose, and ledgers became evidence. Courts examined entries to determine what had been agreed. Witnesses were summoned to confirm signatures or handwriting. Court records show judges reading aloud ledger entries, line by line, as proof. The monotony of the text became the weight of authority. A single phrase, "to be paid at Pentecost," could decide a case. The weight of small transactions. Ledger books did not only record grand ventures. They also listed countless small exchanges. A few yards of cloth, a handful of nails, a small loan of coins. These minor entries fill pages, repeating endlessly. One Venetian ledger from the 14th century contains thousands of such notes. Small sums advanced, minor debts settled, tiny profits shared. To the modern reader, the sheer detail feels tedious, but to the merchant, it was survival. Each coin mattered. The broader network. Through ledgers, we glimpse the web of connections across medieval Europe. A single Florentine book might mention English wool, Flemish cloth, Levantine spices, and German metals. Yet the ledger does not emphasize the exotic. It reduces all to numbers and formulas. Paid for freight of wool, 3 florins. Owed for pepper, 5 florins. Received from Bruges Fair, 7 florins. The rhythm is identical, whether the goods are local or global. Reflection. When you picture medieval trade, remember that its true foundation was not the spice-laden ship or the crowded fair, but the ledger book filled with repetitive lines of ink. Debt recorded, partnership affirmed, balances checked, disputes resolved, all written in formulaic language repeated for centuries. Trade was not sustained by excitement, but by monotony. The repetition of words and numbers created the fabric of trust. And yet, one might wonder, if so much of commerce depended on these dull records, what happened when the ink faded, the paper rotted, or the clerk's hand slipped? Was the economy truly built on goods, or on the fragile endurance of words written in ink? The legacy of merchant ledgers, from medieval trade to global finance. The ledger books of medieval merchants may seem dry to us now, pages of debts, repayments, and repetitive formulas. Yet they left behind a legacy far larger than the merchants who kept them ever imagined. From their monotonous lines grew systems of banking, accounting, and global trade that still govern commerce today. The tedious notes of wool shipments and wine barrels were the foundation of modern finance. From ledgers to banking. By the late Middle Ages, some merchants began specializing not only in trade, but in finance itself. Families like the Medici in Florence or the Fuggers in Augsburg turned from cloth and spices to banking, extending credit to rulers and popes. Their power rested on ledgers. The same formulas used to record debts for wool were applied to loans for kingdoms. An entry like owed by Giovanni, 5 florins for cloth, became owed by the King of France, 10,000 florins for war expenses. The scale increased, but the method was the same: credit, debt, repayment. The dull work of clerks balancing books became the machinery of royal finance. Wars were fought, palaces built, and cathedrals completed because ledgers recorded obligations line by line. The spread of double entry. Double entry bookkeeping, pioneered in Italian city-states, spread widely in the 15th and 16th centuries. Its principle, that every transaction must appear as both credit and debit, was simple but powerful. It made errors easier to detect and profits clearer to track. The system's language was formulaic. To cash, by wool account. To expenses, by freight charges. Pages filled with symmetrical entries, repeating across ledgers. The monotony of double entry became its strength, creating clarity and trust. By the Renaissance, double entry was taught in manuals, with examples so dull and repetitive that students often complained. Yet these boring exercises gave merchants the tools to manage ever larger ventures. Ledgers as legal memory. Beyond finance, ledgers became legal instruments. Courts accepted them as evidence, especially when notarized or witnessed. Disputes over trade, inheritance, or bankruptcy often hinged on ledger entries. Judges read aloud repetitive lines. On such a date, so-and-so owes such amount. Clerks confirmed handwriting. The monotony of ink carried legal weight. A ledger was more reliable than memory, more persuasive than speech. This reliance on ledgers reinforced their authority. To keep careful books was to be reputable. To neglect them was to risk dishonor. The cultural status of merchants. As ledgers grew in importance, so too did the merchants who kept them. In earlier centuries, trade was sometimes viewed with suspicion as less honorable than landholding. But by the late Middle Ages, wealthy merchants gained prestige through their ability to manage complex accounts. The ledger itself became a symbol of respectability. Families preserved books of accounts for generations, using them as evidence of continuity and honor. The monotony of neat handwriting on parchment conferred dignity, as if repetition itself proved stability. From local trade to global networks, the habits of record-keeping that began with wool and wine expanded with global exploration. When Portuguese and Spanish merchants sailed to Africa, Asia, and the Americas, they brought ledger books with them. Entries remained the same. Paid for spices, received such amount. Owed for freight, to be collected. Even as goods became more exotic, pepper, sugar, silver, the formulas of ink did not change. Thus, the repetitive language of medieval ledgers underpinned the first global economy. The monotony of merchants' books made it possible to track obligations across oceans. Ledgers in the modern world. The legacy of medieval ledgers is visible in modern accounting. Balance sheets, income statements, audit trails, all descend from the same repetitive practices. Banks, corporations, and governments rely on records that look remarkably similar to medieval books of accounts. Even today, accountants use standardized language and repetitive formulas. Accounts payable, accounts receivable, balance carried forward. The monotony has not disappeared. It has become universal. What seems boring is in fact powerful. Without the dull discipline of record-keeping, commerce would collapse. The human side. Yet amid this legacy of systems and structures, we should not forget the individuals. The clerks with ink-stained fingers, the merchants poring over columns by candlelight, the apprentices learning to copy formulas. Their labor was repetitive, often unacknowledged, but essential. Sometimes their presence survives in small ways. Marginal notes complaining of fatigue, doodles drawn in empty spaces, arithmetic errors corrected hastily. These traces remind us that behind the monotony were people enduring the same boredom we might feel when confronted with endless lists of numbers. Reflection. As you picture a medieval merchant's ledger, imagine not just the parchment and ink, but the quiet patience it required. Each line of debt and repayment, each balance checked and rechecked, was a small act of order against the chaos of trade. The legacy of these books is not only the rise of banks and accounting, but also the endurance of monotony as a foundation of stability. Trade was not built on excitement, but on repetition, not on spectacle, but on steady ink. And so one might wonder, if our modern world still depends on the same repetitive formulas, are we truly more advanced, or are we still, in essence, living by the same ledgers written centuries ago, only now in digital form?